Resource Watch is brought to you in association with Tebe Investment Corporation.
Hello and welcome. We're talking all things energy today, from the international oil price to shale gas exploration. I'm Nozipho Mbanjwa and this is Resource Watch. Here's a look at stories making headlines in the sector this week.
South Africa's mining and technology industries have received more than 5 billion rand in this year's 1.2 trillion rand budget presented by Finance Minister Nhlanhla Nene on Wednesday. Over 2 billion will go toward promoting investment in mining. Another billion plus goes to fast-track the licensing of shale gas and fracking. Phalaborwa Copper has received the much-anticipated nod from shareholders for a 9.3 billion rand life-of-mine extension plan. The project, known as Lift 2, is a block cave mine development that will see the company extending its life of mine until 2033. And Impala Platinum is embarking on a restructuring of its flagship Rustenburg operations, which will see it merge and harvest shafts, slow development of another, and halve capital spending. The goal is to produce a more concentrated footprint in Rustenburg and stick to an 850,000 ounce per year output, a goal it intends to achieve by 2019.
As you heard, South Africa is on the road to fast-tracking shale gas and fracking licensing. Shell is one of the front runners in this space. I sat down with Bonang Mohale Shell South Africa chairperson. I started by asking him how the volatility in the global oil price was affecting the company's operations and what his outlook for the oil price was.
So ordinarily, as Royal Dutch Shell, we often don't try to speculate where the oil price is likely to be. Having said that, we normally are comfortable in a band of anything between 60 to 80 US dollar per barrel. When it reached 70, you could see a lot of movement. For instance, some of international oil companies started retrenching to an order of about 2 billion. When it reached 50, they took another billion US dollars worth of costs of senior management. Some of them even said for this year, they are not going to give salary increases nor bonuses. So that gives you a sense that the world is really in a difficult place. When we bring it back to Shell, we say we normally take a 36 months view of the oil price so that we don't panic and take decisions that we are likely to regret. We have been in this energy space for 150 years, in South Africa for 113 years. So we invest on a sustainable basis. Right. We take a 10 to 50-year outlook, especially in upstream, in exploration and production. So what it has done, so that we are seen to be also responsive to this below 50 US dollar per barrel price, was to reduce our aggressive growth and to focus only on those markets where we already have made commitments. Right. And I'm talking about our upstream, international, unconventionals. So where we talk about shale gas and this technology called hydraulic fracturing.
Let me jump in there because I think you've raised a number of points and I don't want to lose them. Appreciating that you have a 36-month window, appreciating that you're not going to be speculating on the oil price. There have been reports that the world needs to get used to a $10 per barrel scenario. That's one end of the spectrum, which is quite extreme. And there are other views that saying we could be possibly stabilizing at around $60 per barrel. Midway in between that, hypothetically, we choose a 40 as a midway mark. What does this mean for Shell South Africa? You've already begun to aggressively review growth, expansion, new markets. At 40, what else is Shell likely to do?
We'll all be in a spot of bother and indeed in a difficult space. Some producing countries, crude producing countries, we know that their costs are around 50 to 70. So if they are selling at 40, it means they are really operating at a loss. So some countries will stop being producers. Some of the marginal operators, especially around North America in shale gas production, in hydraulic fracturing, we know that their costs are slightly higher than that. So you'll see really a number of people closing off. As far as Shell is concerned, we are lucky because the view has been taken that the opportunity that we are chasing in two spots, one is offshore, on the west coast, Orange Basin, very close to the border with Namibia. There we are searching for crude gas and condensate. The one that generates more heat than it sheds more light is the Karoo, where we have anything from the 5th to the 8th largest gas reserves in the world. So there Shell has said, this is too big an opportunity not to take to its logical conclusion. So in the worst case scenario, we will have a low cost holding position, especially considering that one, we've been at it since 2008. We were awarded an exploration rights agreement, i.e. license, on the 27th of November 2012 on the offshore. In the Karoo, up until today, we're still waiting for a license. So really the tragedy is that in that environment, you might be a victim of the global recession. Secondly, you know that capital is mobile and it will be looking for the best commercial terms and attractive returns.
There's been questions as to why you're still waiting for that particular license. If you go back to the ANC's stake through Tebe Investment Corporation into Shell, one would make the assumption that you'd be first in line to get those licenses and to get the ball rolling. Where's the holdup?
So first, correction. Our BE partner since 1998 has never been the ANC. It's Tebe Investment Corporation.
Who owns Tebe?
A lot of investors. You and I, you can buy shares in Tebe.
What's the link between Tebe and ANC?
There's no link at all. But one of their majority shareholders is called Batu Trust. That's not the ANC. It's a trust that has lots of people. If there are 100 people, you can surmise that probably 62% of them might vote for the ANC. But Batu Trust is a broad-based black economic empowerment grouping. So we've never really had any direct stake in Shell by the ANC, but we have always had a long-term relationship with Tebe. That started in 1998. 2002, we decided to sell them 25% of Shell South Africa. We called that marketing, and it was consummated. 2005, we sold them another 25% that they don't already own. 2012, we sold them an extra 3 percentage point, responding to the 25% plus one vote required by the mining chart.
Let's go to Africa. Let's go to Nigeria in particular and put into the context the call for an emergency OPEC meeting. That meeting hasn't taken place, but there's lots of speculation that what we're likely to see here is a change of strategy, a change where it's no longer maybe about market share over output. What's your sense? Do you think that the analysts have got it right on that one?
I think yes and no. Yes, because OPEC countries are responsible for about 40% of the global output. One country, Saudi Arabia, pumps around 11 million barrels of crude a day, every day. At the peak, at the moment, they're about 9.8. So they have about 72% of the world's proven crude reserves. On the other hand, you then say Saudi Arabia has a genuine concern that says each time the oil price tanks, we are asked to increase production because this is response to supply and demand. By the time we come back, more often than not, we have lost market share. So in this instance, we'll hold back and let the world sort itself out, so that by the time we come back, even if the marginal producers have fallen off, at least we can maintain our market share. There are also other people who speculate, because this is an area of conjecture, that part of OPEC concerns might be North America is energy independent for the first time. 2010, they became the net producer. 2% of the GDP growth of the US of A can be directly ascribed to the shale gas revolution. That has really created probably 762,000 jobs, added probably about 920 billion US dollars just in revenue.
You indicated earlier on the long lifespan that Shell has had in this particular sector. How do you think OPEC is going to have to position itself or reinvent itself to retain its relevance in a dramatically fast changing sector?
You're absolutely correct. So everything about the world is changing. You and I used to carry books. Our children are now carrying iPads and e-readers, etc. The world beyond 2010, as far as Shell is concerned, we find that 50% of our revenues now come from gas, not just from crude. So we are going to see a world where even renewables play an increasing role as a result of our absolute rightful concern with the environment and indeed with the climate, greenhouse gas emissions and CO2 emissions in particular. South Africa takes a particular seriousness around that because we're the only country, when we were in Copenhagen, that made commitments to reduce our CO reductions emissions by about 30% by 2030 and 35% in another 5 years.
You talk about the natural sources being there for us to take full advantage of a green revolution. Is it trickling down to the household level? Is it trickling down to the corporate level? I ask this because of a concern around carbon tax. It's all eyes on the budget today for Finance Minister Nhlanhla Nene, and yet on the back of this we've seen a slew of corporates coming forward and applying for exemptions from carbon tax. So to me it seems like there's some sort of pushback and some sort of resistance to actually getting onto the bandwagon. How do we overcome that?
Especially because we haven't even started talking about hydro. Some of the biggest rivers in the world, second only to the Amazon, is found here, the mighty Zambezi. That's why the Cahora Bassa and hydropower is a real possibility. Ethiopia is positioning itself as the biggest hydropower producer. And if we can have some sort of regional integration, Africa can produce enough for its own consumption of energy and still have an excess that it can then export to Europe. Is it trickling to where it's needed the most? The answer is not yet. Everywhere else in the world, developed countries, more than 85% of their people have electrified. In Africa, that is hovering around 35 to 40%. So you can see that issues of energy poverty are real and indeed immediate, especially when you think that it's all about economic growth. And in those countries that have shown the highest economic growth, you see the highest electrification penetration. Where they are the most poorest, you also see the lowest. So energy is actually the third means of production. Governments that are really taking their people's personal growth and development seriously will start by driving energy as a serious propeller for economic growth to address the things that keep us awake at night, stubbornly high levels of unemployment that then leads to increasing levels of poverty and increasing levels of inequality.
It's always enlightening speaking to you.
Ngiyabonga sisi.
And that's it for this week's show. Do stay in touch talking to me at The Real Nozi. And don't forget that our hashtag is ResourceWatch. Until next time.